What's up, profits? Welcome back to part 4 of value investing. Today, we're looking at one of my favorite websites of all time, probably is my favorite of all time, finviz.com. You can kind of come here and you get everything that you need to know about stocks. So you can kind of go around and play around with this website. You can look at crypto, you can look at different futures. You can look at this big giant map that shows you, the growth and decay of every single company that you can purchase from today, which is very helpful. But what we're going to be focusing on today is the screener, where you can use so many of these different filters to filter through and pick stocks to use value investing on.
Yeah, we're gonna have a blast today. So just a reminder, before we dive into all this, we're gonna remind you of the philosophy and what we're looking for in value investments. So we're looking for stocks that are undervalued in comparison to their intrinsic value, and also the stocks generally should be from companies that are well established and are already known to be profitable and be able to handle tough economic times. Um, and just a side note before we dive into all this, using too many filters can actually filter out way too many stocks. And it's possible that if you use all of the filters we suggest, you may be left with none. So I would just suggest that you take these kind of with a grain of salt, kind of just like use it as you please, change it, edit it as you want to, so that you can fit your investment goals.
All right, so the first filter that we're going to be going over today is the market cap filter. And what we're going to do for value investing is we're going to want to sort this to the plus large over 10 billion. And what this will allow us to do is it's going to filter us companies that are larger and more well known to be profitable. So less risky investments, but also have a lot of room to grow. So that's one of the main things we're looking for in value investing. And then the next filter we're going to be looking at is the forward PE filter. And we're going to want to put this to the under 25. And it's pretty similar to normal PE, but it compares the current price of the stock to the future earnings per share. And it's usually better for the company's forward PE to be lower than its normal current PE. And this will just filter for companies that are showing solid earnings in the near future in comparison to its current price. And then the next is the EPS growth in the next 5 years filter. And we're going to want to put this to the over 15%. And this will allow us to filter for companies that we're expecting to, or that they are expecting to increase their earnings, which is pretty self-explanatory. And then we have the return on equity filter, which we're going to want to put this to over 15% or over plus 15%. And this will filter for companies that are effective at using their shareholder money to make profits. So all of these are pretty helpful in their own different ways.
Yeah, so after that, we will be looking at the PEG ratio, the price to earnings to growth ratio, a personal favorite of mine. And this one we'll be looking for stocks with a PEG ratio of under 2, which indicates that a company has a very good price to earnings ratio in comparison to their expected growth rate in the future. After that, we will be looking at the debt to equity ratio. And I know in the last video I said it should be under 2. But unfortunately, FinViz doesn't have to filter that broadly, so we'll just be going with under 1. And this just shows companies that have a lower debt reliance, therefore being much less risky investments. After that, we will go over here to the current ratio. Let me help. Yeah, there it is. And this one, we were looking for over 1.5. And just a reminder, current ratio is current assets over current liabilities. So this filters for companies that are very liquid and are very capable of paying off their short-term obligations using their current assets and current liabilities. And lastly, we will be looking at the dividend yield. And as I said in the last video, we're going to be looking for a dividend yield of over 2%, indicating that a company pays good dividends in comparison to the price of the stock. And really, this filter is only really important if you're looking for value stocks that have dividends. Not necessarily all are, but a lot of value investors do look for that. So that one's not necessarily important, but it's just a good option to have on there. So as you can see, we only have one stock that fits all of this criteria. So that's why we suggest not using all of them, maybe going a little bit broader, maybe go to over 10% on return on equity. Just change it up a little bit as you please to broaden the amount of stocks you can get. And yeah,
Yeah, so this is about everything that we have for this video. In our next video, we'll be going over just how to do value investing in practice after you've already learned intrinsic values and fundamental analysis and all that. So next video, we're going to be going over how to actually put this into practice. And
Yeah, you guys made it really far. Proud of you guys.
Yeah, I'm super proud of you guys. Profits out.